Welcome back. You're watching a Yahoo Finance special, Crypto in 2023, brought to you by Intuit TurboTax. Joining us now for a deeper dive into the world of cryptocurrency, we've got Grayscale CEO Michael Sonnenshein. Michael, great to have you here with us, as well as Yahoo Finance's Jen Schonberger. Michael, just to start things off, broad strokes here, Crypto 2023, people are wondering, coming off of 2022 and the crypto winter that we've entered into, what 2023 holds. What do you believe is on the horizon?
Well, first of all, it's great to be here. Thanks for having me, guys. I would say that investors are not deterred. What we've seen in crypto over the last couple of months is a tremendous amount of leverage that's come out of the crypto ecosystem. And as we move into the better part of 2023, I think investors are focused on some upcoming catalysts around the crypto ecosystem. There's a major upgrade coming to Ethereum. We're about a little more than a year away from the next Bitcoin halving. And certainly today, I'm joining you from Washington. There's a lot of conversation going on around crypto in Washington with recent events, certainly not deterring policymakers, but instead, perhaps we see 2023 as a year where regulation becomes front and center for crypto.
We will get to that regulation for certain, as our own Jen Schonberger covers Washington very closely here. But Michael, I got to wonder, for Grayscale specifically, how do you look at these next 6 to 12 months and how critical they could be?
There's no question that the entire resources of the firm are focused on our lawsuit right now. So for those of you who are just tuning in, Grayscale sponsors the world's largest Bitcoin fund, Grayscale Bitcoin Trust, ticker GBTC. And we have been working proactively to convert GBTC into a spot-based Bitcoin ETF here in the US. And the SEC denied GBTC's conversion in June of 2022. And since that time, we've been in active litigation with the SEC. And so the case is proceeding swiftly, and the oral arguments will be heard at the beginning of March. And we could have a decision on the case as soon as the fall of 2023. So squarely focused on our litigation there, and really, again, protecting our investors and doing what's right by them.
Hey, Michael, Jennifer Schonberger here. It's great to see you. On those oral arguments that are set for March 7th here in Washington, what can we expect? What do you plan to argue? What's your case?
Well, the SEC really has taken a stance that is what we think arbitrary and capricious. They allowed Bitcoin futures-based ETFs into the market and have continued to deny spot-based Bitcoin ETFs from coming to the market. Ultimately, we have straightforward, common sense legal arguments that we believe the court will be persuaded by, and feel that, when we think about recent events in crypto, we have to think about protecting investors, continuing to give them full and fair disclosure. And there's certainly no question that moving to a spot-based ETF would certainly give investors greater protection, greater regulatory oversight, and again, very confident in our arguments as we head towards oral arguments in early March.
Michael, if you don't get the outcome that you hope for with this lawsuit, I know you've proposed a possible plan B where you could tender 20% of the shares outstanding. That would require a conversation with the Securities and Exchange Commission for a more customized plan to adhere to legal requirements. Have you spoken with the SEC to try to lay the groundwork for that if you don't get the outcome that you want on this lawsuit?
That's exactly right. So earlier in this year, we did announce the possibility of a tender offer if we do exhaust all of our legal options in contesting the SEC's decision around GBTC converting to an ETF. In order to facilitate a tender offer, we would certainly need shareholder approval, but would also have to work proactively with the SEC to obtain relief from the tender offer rules. Unfortunately, I have to say that reaching a tender offer would be a less optimal outcome. The most optimal product structure here is a spot-based ETF. It would allow the product to track the Bitcoin that it owns day to day, the way that all ETFs have that embedded arbitrage mechanism. And again, would really give investors greater oversight and protection sitting on a national securities exchange. So if we did end up in a scenario where we were pursuing a tender offer, it would really mean, solidify that the SEC and the regulatory community here in the US was continuing to shut the door on bringing Bitcoin, even closer into the regulatory perimeter.
Michael, how have the SEC proceedings impacted fund flows right now?
I'd say that investors are generally in it for the long haul. Grayscale investors really are folks that have long-term conviction in crypto, and we fortunately have investors across all 50 states. This includes retail investors, this includes institutional investors, and typically what we see is when we're in these range-bound times, investors typically are slow to allocate, and as soon as they see crypto beginning to break out, they begin to dollar cost average back into those positions.
Michael, you're a subsidiary of the Digital Currency Group, which is also the parent company for Genesis Global Capital, which recently filed for bankruptcy in the wake of FTX's failure. DCG is reportedly selling large positions in several crypto trusts that are operated by Grayscale at a deep discount to try to raise money to pay back creditors. What can you tell us about this, and what sorts of further ripples could we see as a result of this bankruptcy pop-up?
It'd be really difficult to comment on the specifics of what's happening with Digital Currency Group, since it's not the business that I'm responsible for day to day. What I can share is what's out there in the public around DCG, which is that as a company that invests in private companies, that holds tokens, that invests in Grayscale products, that incubates businesses, DCG is reportedly selling some positions in some of the Grayscale products that it owns, really as part of its regular portfolio rebalancing. But beyond that, I'm not how much more to make of DCG's recent sales.
Michael, I don't mean to be grim here, but for a lot of the companies in the crypto landscape, the management teams have had to try and figure out, how do we get to the other side of this crypto winter? How do you approach that at Grayscale?
It's a great question, Brad. We've been really principled and really deliberate in building the Grayscale business. I have a phenomenal leadership team. I have a phenomenal organization that has continued to focus on all the tasks in front of us as a team and never getting distracted by headlines. We have been a lean and mean organization that's really been focusing on building the foundational infrastructure of the business. So our own broker-dealer, our own registered investment advisor, and really continuing to operationalize Grayscale that will allow it to scale for its future growth. We're an organization that did not get out over its skis. We didn't take on leverage. We didn't get too large as a company. And we've been through 2 crypto winters before, and we're weathering this crypto winter as well.
And Mike, 1 second. Have you had to also reduce headcount, restructure costs anywhere?
We're always being cost conscious. So when we think about our service providers and any of the other organizations that we're aligned with, we're always doing things in a way that gives us optionality so that we're never overcommitted as an organization. And I think having that agility has been really, really key to Grayscale's long-term success.
Michael, we always appreciate getting some time with you, always appreciate the time, the perspective, and the analysis, as well as what the future holds for crypto. Michael Sonnenshein, Grayscale CEO, thanks for the time today, as well as Yahoo Finance's Jen Schonberger.
Thank you, guys.